Hey, what's up, good people? How you doing? Welcome back to Stock Up with Larry Jones. Hit that like, subscribe, and notification bell. I'm back home. I'm really tired, but hey, it's late, but I want to get one out today just to hit some key points, all right? Hey, make sure that you don't miss out on 15 free stock, up to 15 free stock, as you could see here. But what's extra cool is they're going to give you 5.1 on your uninvested cash. And then for those of you that are just opening up an account, they're going to give you an additional 3%. So you will be earning 8% on your uninvested money, better than any bank. But you gotta get it funded. You can't just download it and open it. You gotta get it funded, okay? So let's check out and see what the indices closed at. So as we could see here, the indices came roaring back. They were selling off in the pre-markets, and then they came back strong towards the day. As you could see, it was a roller coaster ride, up, down, up, way down, up, down, up, down. It was a roller coaster ride, but the Dow came through strong at 219, and you could see here the S&P is hovering around 49. As you could see, it was a good day for the indices, though a lot of stock were red. We had a lot of earnings that came out after Bell, and everything after whether it was a beat or a miss, it wind up being red. And that's a little nerve-wracking for me personally. Now, let's go to what made the market jump green. Why did it jump green? Well, here's why. GDP, gross domestic product, actually rose higher than that was expected. It rose higher, meaning it's showing that our economy is yet strong and robust, okay? High GDP and low unemployment is showing that the market is yet strong. But the other end of that is now the Fed may not start cutting interest rates this year, not March, not April, not May, but by June by the earliest now. So that's on the table. So let's take a listen to the GDP news.
CME HQ with a litany, a long list of important breaking news. Let's start out with our first look at fourth quarter GDP, expected to be up 2%, buckle up 3.3%, up 3.3%. That is a huge jump. Obviously, it follows a stronger 4.9, but this is much stronger than many anticipated. And if we look at consumption, 2.8, 0.3 higher than expected, but also 0.3 less than the rearview mirror, which was 3.1 on the price index. Half of last time, 1.5. We're expecting 2.2. Our last look was 3.3. 1.5, how does that figure in? 1.5 would be the lowest since it was negative, and that was June of 2020. Now let's go from month over month to core, shall we? On core pricing index, quarter over quarter, expecting 2%. We had 2%, that's the number, and 2% in the rearview mirror. Let's quickly go to retail inventories. We're expecting unchanged. They popped up big time, up 0.8%, up 0.8. And of course, these are the types of things that boost GDP. If you look at wholesale inventories, the same scenario. Wholesale inventories breaks 2 months negative in a row, up 0.4, up 0.4. That's the biggest increase month over month on those inventories since November of last year. Now let's go to trade, shall we? On trade, what we are seeing is minus 88.5 billion, very close to expectations. Durable goods. If you recall, last time, 5.4, that was the best since July of 2020, and that moves up to 5.5 on a revision, and the averaging takes hold, unchanged, less than expected, but when you put the 2 months together, you can see that it isn't a bad number. Transportation, it jumps up to 0.6%, 3 times expectation, 1/10 higher than the rear view mirror, so we could see transportation orders boosted boosted durable goods. And if we look at capital goods orders, non-defense, aircraft, a proxy for capital spending, it's up 0.3, much stronger than we were expecting.
So you could see that everything was expected or a beat. Actually, core was a beat and regular GDP, gross domestic product, was a beat, right? We expected 2 and we got 3. Core was expected. So we expected 2% and we got 2% on core. But regular GDP, gross domestic product, was expected to be 2%, but we actually got 3%, showing that you guys went out and spent money. The economy is strong. Now, let's shift and let's take a look at Tesla. Tesla has taken a beating. You guys heard the earnings report on yesterday. It was a miss, okay? It was a miss on everything. Deliveries, it's just not good. It's just not good. So it was a miss and a miss and a miss. And what's even worse was forward guidance. You know, Elon was just talking about that the rest of this year is not going to be good. It was a no good report, and then he verbally gave forward guidance, meaning no good, telling you to like lower your expectations like he did last quarter. Remember, he was telling you guys the truth, but because it's Tesla, no one really listened. So as we could see, Tesla just tanked today 12%, and it's down another percent after hours. If you pull up a chart, you'll just see it could start free falling, right? But we don't know where, right? We just don't know where. You have all of these levels of support, right? And it keeps breaking beneath those levels of support. So remember, anything I say is not a suggestion for you to buy, hold, or sell, as I struggle to keep a voice from all of this traveling. But all I'm doing now is I am DCAing down now, right? Because someone bought it at $400. It's $182, right? Now, let's just keep it real. It could come down to the 160s. It could easily come down to the 180s tomorrow or by Friday, by the time that you see this. But now is not, I did not buy any big chunks of Tesla. The Tesla shares that I'm buying right now are for long term. So I'm not trying to catch the bottom, and I'm not trying to catch a falling knife, meaning I'm going all in. You let me know what you're doing with Tesla. I'm adding to my long position. All right. Now let's let's check this out. Remember when I was telling you guys that HUT was, it looked to me like it was a short report done on HUT. So now HUT was up today 17 and 18%. Actually, HUT ran up. It was up as much as 18%. Actually, 21% at the highs today. HUT was up. For those of you that don't know, HUT is a crypto mining company. Why? Just like I told you guys. Look at this. HUT 8 Corp challenges a short report. See here? Short sellers report. Okay? Claims financial solidity. Okay? Had to put my glasses on. All right. You know, we keep it real. As Keenan Gray say, we keep it real, we keep it raw. But it just looked, smelled, and sounded like a short report. And a lot of people was mad at HUT 8. And they were saying, hey, how come they weren't coming out and defending themselves? I will let you know that they contacted me and they wanted me to interview them before I left town. And we just couldn't make it work. But they went on other shows and they started to combat the short report. Now, remember, I always say when there's a short report, I kind of make money by waiting for it to come down. Just like share dilutions. For a lot of you guys have Core Scientific, which is another Bitcoin mining company, and you got warrants and you got all of this. You know, I just don't know how it's going to come out. I just know that there was a share dilution done while all of this is happening. So yes, your shares are now worth less. But I want you to do your homework and Google when a company has a share dilution, what is the best price to buy it at, right? And you're going to see your answer right there. Remember, anything I say It's not a suggestion for you to buy, hold, or sell. But I like to teach in a way that you can think for yourself and not just make money for today, but for tomorrow and forever to come. You guys know that top link is Stock Up You, right? You guys know that you can learn how to trade, learn now, and earn for the rest of your life, right? You guys also know that that price will be going up. But in closing, I want you guys to make sure, those of you that only has one or two brokerage, that is a big mistake. You need multiple brokers. Keenan said this the other day, and it's the truth. Every wealthy person I know has 4 to 5 brokerages. Okay, you need different brokerages. One for your long term, one for your swing trades. And I actually have a broker just for my options, and I only do options in that broker. I have my long term retirement in another. And it just keeps everything separate and clean, and you will be a more focused trader. All right. So in closing, 15 free stock for those of you that don't have more than 2 brokers. Go ahead and download the second link below. All right. The second link below, that is a moo, and get up to 18% and 15 free stock. Let me know what you guys think about Tesla. Will it continue to fall, which I believe it will? And how far down do you think it's going to fall? All right. Make sure you hit that like button. If I have a voice, I'll see you guys tomorrow. Live, love, laugh, and learn. It's good to be back home.